Has HMRC really introduced a new tax and coming after you for selling all of your personal effects online? This video is to debunk many of the social media posts that claim that HMRC has introduced a new tax, the so-called side hustle tax, whereby if you make more than £1,000 selling your own personal items online, then you need to declare it to HMRC and pay tax on the profits. Now, there is some hint of truth at selling things online and having to pay tax on those profits, but we'll get into that in a moment. As I said, this is a debunking video because, very broadly speaking, if you are selling your own things online, then you've nothing to worry about. The second thing to debunk here is that there is no new tax. In fact, this has been around for some time now. There is a tax-free allowance on property and trading income, which you can find on the government's own website, which has been available since 2017. This is up to £1,000 each tax year, free allowances for property or trading income from the 6th of April 2017. If you have both types of income, you'll get £1,000 allowance for each of those. I'll link that in the description below and you can go and read more about it. But very broadly speaking, what does this apply to, and do you need to be worried? Well, the reason this has come to the forefront is because from the 1st of January 2024, companies such as Airbnb, eBay, Uber, Vinted are obliged to collect and share details of income that sellers have made on their platforms with HMRC. This is not a new thing in terms of the tax itself. It's just a new reporting mechanism because guess what? HMRC want their slice of those people that are making their money online and, lo and behold, not reporting it to HMRC. But it's not new, as I say. So what is it? Who does it apply to? And do you need to be worried about it? Well, simply put, if you are a trader and you make more than £1,000 each tax year from those trading profits, then you need to pay tax on those profits. Again, this is nothing new. But if you are selling your own personal effects online, then this is not going to affect you. However, many people, lo and behold, are trying to sneak through extra sales and pretend that they are selling their own things, which is probably why HMRC are coming after them. Now, if you think of this in what I like to think of as common sense, then you'll be able to work out for yourself whether you need to pay tax on those earnings. If, for example, you go out and buy a suitcase full of old clothes from a car boot sale, only to then clean them up, wash them, iron them, press them, sell them online for 3 or 4 times what you paid for them at the car boot sale, that will be trading. But you've still got this allowance of £1,000, so you can get into this side hustle with making a little bit of money to see if it works before you start having to pay any tax on those profits. But if you start making £3,000, £4,000, £5,000, £10,000 a month, which is not that far of a stretch when you think you could do this day in, day out, and if you do it consistently, making a few pounds an item, sell hundreds of items, you get the idea. You start to make a lot of money, then this could be not just a side hustle, it could turn into a very serious business. But many people have not paid tax on those profits and thinking that, well, I'm just selling a few old clothes, I can pretend that I'm selling my own stuff, which is why HMRC have now required these platforms to report to them these profits that these people have made. But as I say, if you are trading, you need to pay tax on the trading profits. If you've just decided to have a wardrobe clear out, as some social media posts have talked about, and then said that they're going to have to pay tax on those after-tax money earnings on things that they've already bought, that's not really the case, and that's not what it's designed for. If you've bought, let's say you've bought a coat and it was a few £100s and you decide you don't like it the following year, or you just want to change, or you've gained weight, you've lost weight, whatever it might be, you just want a different coat. You can sell that online and it's not going to be trade because it's your own property. You've bought it with after-tax money. It's your stuff. You can sell it. There's nothing wrong with that at all. If, on the other hand, you sell it for £100, maybe more than you bought it for, and you think, hello, I can start making money doing this sort of stuff, then you go into the market for car boot sales or wherever it might be to find many more of these coats and then start selling them and making £100 a time. That becomes a trade. So many of the things that will indicate to you whether or not it's a trade are, for example, did you intend to buy it and then sell it for a profit? Did you intend to buy it and sell it immediately without using it? Did you buy many of them all at once and intend to sell them? Did you buy them at a discount and intend to sell them? Did you go to a store and buy 10 of them with an intent to sell them? All of those would be trading. Did you buy something that is a run-of-the-mill product like toilet paper or coffee, or a bulk load of some consumable product or substance that you are then going to resell? That might well be trading. And then if you are trading, then you've still got this allowance, as I say, but anything above that very nominal allowance, then you're going to have to pay tax on those trading profits. Other things you might think about are, how many of these do you sell? How regularly do you sell them? Are you running a business that is selling similar products and you're just throwing this into the mix? You might be buying something, repairing it and then selling it, and inherently adding to its value. For example, if somebody were to buy old lawn mowers, many businesses have started by buying old things like that are broken and don't work. They fix them using their skills and talent and then resell them when they are working. No doubt multiplying the value of that purchase so that they can resell it for profits. Again, each of those are likely to be trading, and you'll need to pay tax on those trading profits. Other indications that you're trading and might have to pay tax are that you might be borrowing money for these products and then reselling them and then settling the finance once you've sold the products. Some people, this is maybe an idea for some people that might want to do that as a way of financing your business. Not that I recommend financing, but some people want to. Is you can buy things on 0% finance, pay them off over 18 months or so, giving you 18 months to sell the product, perhaps at a profit. But if you're buying it retail, then you might struggle to sell it at a profit, but hey, some people do that regardless. And then let's not forget that there's other areas of tax that we'll also need to look at as well, which include tax credits. So on the one hand, whilst one section of HMRC might be trying to convince you that you are trading, another part of HMRC, the Benefits and Credits Department, might be trying to persuade you that this is in fact just a hobby and you're not doing it commercially, so as to deny you tax credits for the hours that you are committing to this venture. This sort of activity might also affect your housing benefit and council tax benefits, because if you are trading and you've undeclared that or not disclosed that amount to HMRC, then do bear in mind that you might need to declare this when you're claiming housing or council tax benefits, because of course that might have a knock-on effect as well. Also bearing in mind capital gains tax. If you buy an item, as I have done before, I've not yet sold it, but I have bought an item. One thing I bought is a very old violin, which I paid something in the region of £45 for. I expect that to be worth £3,000 to £5,000. Which in the 23 to 24 tax year, the threshold for capital gains tax is £6,000 for individuals. So that would be underneath the £6,000 threshold. However, from April 2024, the capital gains tax, I understand, is going to be cut from £6,000 to £3,000. So if I sold that same violin for £3,000 to £4,000 to £5,000, then that's going to be over the new capital gains threshold, and I'll have to pay capital gains tax on the difference between the £45 and the eventual sale price, even though it's an individual item, even though it's just me, and I'm not trading in violins. But just the same, if I were to go out and buy a dozen violins of similar age and value and clean and tune them up and sell them for, let's say, £1,000 profit each time, then I'm going to be trading. And of course, I will have to pay tax on those trading profits. But coming full circle, it is not the case that there is a brand new side hustle tax that HMRC is coming after everybody for. It's just that these platforms are going to report those individuals that are regularly selling items and look like they are trading. But if HMRC does look at you because you've had a wardrobe clear out, sold lots of items, and you look like you're trading, just be ready to show that you bought these things for yourself, you've used them, and you're just reselling your own things, if that really is the case. So don't be bowled over by the social media scaremongering, but do be mindful if you are trading and you've not declared it, and be mindful of all the other taxes as well, because if you are trading, you've got that £1,000 threshold. And of course, don't forget about the capital gains tax. Any questions, comments, and dare I say it, corrections in the box below. I look forward to reading those and to doing many more videos because I've neglected this channel far too long. But anyway, thank you for watching. Please do subscribe. We're here on my personal money channel, helping you to build wealth. Thanks for watching, and I'll see you next time.